Hello, everybody. We are back and we are doing our final session on credit. We were supposed to do this bonus section or session a few weeks ago, but then we started talking about taxes because it's tax season. So hopefully you all are still able to join us and we're going to talk about ways to increase your credit. So if you get anything of value, the beginning of the video, middle of the video, end of the video, if you can like it, if you can also leave us a comment, if you can subscribe and also share the content with any other individuals that could use a boost in their credit score. We have Ms. Colime here with us this evening, who has actually been doing the previous videos with me on the credit, and there is a playlist labeled business credit. So if you want to look at the previous videos, she's going to give us a brief bio about who she is and how she got here. And then we're just going to start talking about ways to increase your credit.
Hello, my name is Shalita. As Ebony stated, I have been dealing with credit since 1997. I know pretty much anything about credit, how to dispute, how to increase your score, just working in the collections business. And then after that, I moved over to the law side of credit. And now I'm actually in the banking side of it. So pretty much every aspect of the credit I've worked with. So tonight we're going to talk about pretty much 3 easy ways to boost your credit score pretty fast. And I'm going to use myself as an example. This is actually something that I did when I was in the process of wanting and looking to purchase a home. It's that time of the year, everyone's getting their taxes back. Either you're trying to get a car, trying to get a home, another apartment, or you might just be looking just to build your credit because you have some things that you're looking at doing further, in the year. Maybe you're going to try to establish your business credit, different things like that. So we're going to tell you tonight how to boost your credit score fast. When I say fast, you're talking about you're going to see a boost within 30 days, 60 days, 90 days. And if you follow this to the T, you can boost your credit score anywhere from 150 points to more. And I'll tell you the difference of how you why you would get a lower score than a higher score, based off of some things that I did. So I guess we could just go ahead on and start telling them about it. Or did you have any questions first, Ebony?
Yeah, so let's do questions. I'm going to make sure I'm looking at the comments if you have specific questions, but I want to highlight when you mentioned business credit and the importance of making sure that your personal credit is intact, especially if you're a new business. Now, if you're an established business, you got business credit, yes, you can definitely buy things in the name of your company where you do not have to utilize your personal credit. However, I don't know who's started the rumor, but when you are a new business and you go to a bank or you go anywhere, they're pulling your personal credit because you don't have a history with your business for them to say, hey, we're going to let you go and purchase this Jaguar, because there's a lot of stuff on Facebook, Instagram on, oh, you can get this luxury car in your business name and you don't need credit and you only need an EIN number. That's not true because you have to have personal credit if you have just started a business. So remember that the individuals that are giving you this information, they probably have already been building their business credit. They didn't just day one go and purchase a vehicle. And we can talk about just, small things that individuals can do. And then we can talk about real world examples of things that I've done, things that Ms. Colline has done as well. But if you were to say, like, what's one of the easiest things that a consumer can do today to begin to boost their credit score?
I would say the easiest thing you can do is what we call piggyback. piggybacking on someone else's credit. So say maybe your mom or sister, brother have really good credit. They can add you as an authorized user, on a credit card. Uh, Caveat to that is if their credit goes south, so does yours.
Yes.
But it's something that you can do immediately because once you're added to the authorized user portion of it, it's not going to tell the credit bureaus that, oh, you were just added today.
Mhm.
So it gives you the history, the credit
Mhm.
history that you need to be able to bill. And like I said, if it's someone that's, you know, pay on time and they're paying, more than a minimum and the utilization isn't high,
Mhm.
it's a good fit for you. I'll give you an example. My husband got an Amex card and he put me on it and they had this thing, if you spend so many $1,000
Yeah.
in a certain time period, that they were giving some kind of perks or whatever. So he went in and he spent whatever he needed to spend on it every month. And I'm like, what? Why is my credit score dropping? What is going on? Because
Utilization.
I'm a watchdog. I'm watching my credit, and I'm like, what is going on? Let me go and look. The first one, I really didn't trip off of it. It dropped a couple of points, and in our previous videos, we told you guys credit is so fragile.
Yes.
Those points can go up and down for any little reason. I mean, I feel like sometimes you just blow on the credit score and it's just going to drop, And so when it dropped, because it's not dropping much. However, if you get 5 to 10 points 3 months in a row, that's
Yeah.
30 points. And I'm like, wait, what's going on? And I'm looking and, I go to it and I'm like, oh my gosh, he's at max utilization. So one of the things that we did was that, he had to do it, I think it was like 3 or 4 months or something.
Mhm.
So what we did is that we looked at the date that it was reporting.
Mhm.
So if American Express was reporting on the 17th, I had him to pay it on the 15th to make sure that it cleared their system. And when they reported it reported a zero balance. And just from that alone, because he paid it off every single month, but
Mhm.
just by doing that alone, the next month when they did report, my credit score jumped 24 points.
Wow.
So the
So I
30
got
points that I lost, I got 24 back. And then the next month, it, however, I still lost the 6 points,
mhm.
but it stayed lateral. So what I did was I went and paid something down of mine to get my other points, which jumped me another 16 points.
Now I want to go to just go back. So I want to go through these a little bit slower so we can pull things out and make sure that people are grabbing the content. First, when you're talking about utilization, explain that further and what's a good utilization rate.
Great, great. So utilization is how much of your credit you're using.
Okay.
So let's just say you get a credit card for 10 grand. So, you're like, oh, they gave me 10 grand. But
Mhm.
believe it or not, they don't want you to use that 10 grand.
Right.
you know, they they only want you to use a portion of it. A good
And what's that
healthy
percent?
utilization The good healthy utilization is anywhere between 27% and 10%. Some people think that if it's 0%, that's good. It doesn't boost your score. It doesn't do anything, which, like I said, remember when he started paying it off, I hit 26 and stayed there
Mhm.
because he was paying it off every month. So 0% doesn't help you either. The
Right.
sweet spot is between 10% and 27% of
And then
utilization.
with the utilization, so we have that, but then you were talking about when they report. How can someone figure out when the credit card company is reporting?
Good job. So I use Credit Karma. There's
Okay.
Credit Sesame, there's Credit Wise.
Okay.
On there, they tell you what date that it was reported, that it was well updated. It
Okay.
shows you what date that company updated. And most of the companies kind of pretty much are on the same schedule. Either, some going to report probably 3 days before the end of the month.
Mhm.
Some report like the 15th, between the 15th and the 17th of the month. So it's kind of like, is between those bulks. You would never catch anyone really reporting first of the month because of bookkeeping. You're
Mhm.
not really sure if this is something that should be reported or not. So you will find where they will report. So this is February. So January will be just starting to get reported now.
Okay. And then I see there's a comment. So I'm sorry, let me go back. I want to make sure I say your name correctly, Miss Mendoza. So as far as building business credit, that is going to be a separate series that we're going to have. We're going to probably have a minimum of 3 sessions with that, because that's completely different than how you're going to do your personal credit. But as I said at the beginning of the video, it is most important to make sure that your personal credit is in line, especially if you're a new business owner, because you're not going to have the same perks as somebody that has been in business for a long time. Their DUNS number is reporting. They have their EIN that's now attached, and that's reporting as well if they run that. So you really have to make sure that your personal credit is pretty good, because I had a business. I think I started a business in 2013. I still have that business, but when I got my first credit card for my business, I had to use my personal credit. But then after about a year of me having profit and banking statements and paying the credit card off, I was then able to then get credit inside of my business company, right? So if I wanted to purchase a vehicle, I could do that at that point. But I use some of the same tactics that we're going to be discussing this evening when I was attempting to build my business credit. So if you have A1 credit, then yes, go ahead. But if you know that you probably need to do a little bit of work on your personal, I recommend doing that, because that's going to catapult you in a position to immediately start building your business credit more quickly, because you'll be able to get a business credit card, or you can get other business accounts as well, but they don't have a higher impact on your business credit as a business credit card would. So are there other items? We talked about in our last video about, let's say with the credit cards, right? You can have like your Netflix account, right, on your credit card. And with that, what that does is I have one credit card that I use for everything, and then I pay it off. But then I have another credit card that has my Netflix on it, and it's on auto pay. It's whatever Netflix, keeps increasing to. So I don't even know what it is at this point. But that means every month I'm getting a point, because I'm not carrying over a balance, and I'm always going to pay that on time. So what we discussed in the previous video was just making sure that if you're going to do something on auto pay and you're going to do something like that, make sure it's a small dollar amount that you know for a fact is always going to be sitting in your bank account. So for me, I know Netflix, $15, $20, whatever it is always going to be sitting in my bank account, versus I'm putting rent or mortgage or something like that on auto pay, and life may happen and I don't have, $1,000 or $2,000 or whatever the case may be that's sitting there, and then you forget because it is on auto pay, and now you've overdrawn your account, or now you're not able to pay the credit card off, and then you're going to have you're going to have a balance each month when you're rolling it over, and you might go over the 27%, or you said 10 to 27% utilization.
Yes. Yes. And and that's just based off of the credit limit you have. So if
Mhm.
you're just starting off with your credit, and you know that your credit limit is 500 or $1,000, you definitely want to make sure that you're making very small purchases, or you putting very small bills on auto pay, to that nature, because you don't want, it's very important to make sure that you're paying that off every month and keeping your utilization down.
And another thing I want to talk about is the credit building credit cards. So I think if, again, you're trying to build your credit, there are so many organizations, banks that have these cards. And with these cards, what you can do is it is a secured card though. So let's say the card is for $300. You're going to have to come up with that $300, but then let's say your payments are $50 a month, and then you would pay, every month you will pay $50. It'll probably be an automatic withdrawal from a bank account. They might set it up that way. And then after 6 months, you've paid it off, you get your money back, but then now you've built credit and you're in a position to possibly apply for some smaller unsecured credit card. But I think sometimes when you go to banks and you're trying to get a credit card, you don't even think about the secured card, and the banks don't really tell you about those cards a lot either. They'll just say, oh, your application was denied, but it's a rarity that they're going to say, hey, let's sit and look at this opportunity that you can have in order to build your credit.
So the only thing is that if you, now this is kind of treading waters. So if you're in the process of building your credit, even though it's a prepaid card, you don't want to close it because that's going to be your longest history. So that would be, definitely a negative impact on your credit. So that's the thing. I would suggest there's a company out there that's going to give you a credit card. It's probably going to be a 32% interest rate or something to that nature. You might start off with something $150 and it's a $99 what is it, like a $99 yearly fee or membership fee or something to that nature
with it.
I do suggest those versus the prepaid credit cards, the secured credit cards. And the reason is that if you remember, we said once again, credit is finicky. It knows that this is a secured credit card. So you won't get the amount of points that you would from having another credit card. So, if you can, and another thing too is utilize your phones. We're on our phones all the time. Go into different forums, check out different banks, shop for your credit card. You want to check to say, can I get a credit card with Bank of America with a 520 credit score? There's forums out there of people, live people, real people that in the same situation that you're in, and say, oh, Bank of America's not good, but maybe you should try this card at US Bank. Or you should do, there's things out there. It's tons of forums. People talk about credit so much, and during this time, definitely stay aware. Always stay aware of what's going on. Immediately, as soon as you think about, hey, I need to rebuild my credit, immediately download, that Credit Karma or that Credit Sesame, Credit Wise. That's very important. And a lot of banks use them, like Capital One, Discover. I want to say US Bank, I think they all use Credit Wise.
Now, what about the what do people call it? The checkout trick, cart trick, where you're buying something, let's say at, I don't know, Amazon. Honestly, I only can think of Victoria's Secret because it always pops up when I'm checking out. And then people will do something. I don't know how it works, y'all, but I know I've heard the terminology. I can't give you all the details, but then you'll automatically get approved. What is the impact if it's a store credit card versus, say, a Visa or Discover?
Well, you know what? With the store credit cards, the only bad part about the store credit cards is that They're all usually housed off of one to two banks, right?
Right. Synchrony.
So, community, I think,
Mhm.
for the most part. And then you have a few of the larger ones that's probably with Chase, right?
Mhm.
So, the only downside to the department store cards is that once you get in with one bank, say you get in with Synchrony,
Mhm.
and you have a good, they keep offering you,
Yeah.
and next thing you know, you have a lot of retail cards.
Mhm.
Well, and creditors don't like to see that. They'd rather see
Mhm.
you with a lot of uh, big bank name cards versus
Mhm.
retail cards. In
Okay.
addition to that, of course, you know your interest rate on those cards are going to be
Yeah.
astronomical, and because it's not based off of whether you have good credit or not. You know, long as you
Mhm.
don't have horrible credit like F or Z credit,
Yeah.
you're going to get that card, even if they start you off with $300. So, but yeah, definitely, if you log in, you set up your account with Victoria's Secret. Eventually, one day they're going to throw out there saying, "Hey, get this card." And so, most of the time, if they do that, they only pull a soft credit report.
Okay.
So versus you going and asking them for a credit card.
Right.
So if if it's a store that you always shop at, yeah, set up that online account with them. Purchase through that online account, because they're going to offer you a soft pull. So that way you can get the line of credit and you don't have to worry about the inquiry. That's the most important part of doing the at checkout
Okay.
hack,
And then let's
so they
see,
call it.
JMS Finance. When you have multiple credit cards, try to have one credit card pay the other every month, and instead you're paying multiple cards. You're only paying on one card. Um,
Say that again. I didn't hear you.
oh no, I'm just reading first and then I'm gonna comment out loud. All credit cards are treated the same as far as points. Doesn't matter if it's secured or not, you receive the same amount of points. They also have credit lines great for small businesses. Okay, so two things. It's called the shopping cart trick. So thank you, Sean. And then as far as the multiple credit cards, now I have not done that. Typically, what I will do, because I do have multiple credit cards. So if I have a larger purchase that I know that I want to purchase, I'll purchase it on one card. I always have a credit card that has a zero balance, always. And I always get the 0% offers. Like do a balance transfer, you pay, a small transaction fee. I'll be able to have 0% probably for normally it's like 2 years. It's a really long time because I have a credit card, well, Bank of America right now on 0%. And I'm gonna pay that off before the 0% ends. And I kind of just bounce between those if I know I'm gonna do a larger purchase. But I haven't done it where I take one card and I'm instantly paying off another one. Also, I want to make sure that we're mindful of making sure that you are using your credit cards. So, I've had one of my credit cards for over 20 years and I hadn't used it because I had no purpose for it. And I honestly, I had lost it in the house somewhere. So it never even crossed my mind to use it. And then I got a letter that they closed the account. Now I was devastated. Why? Because that's taken away credit history. So I call them and I say, hey, you closed my credit card and I don't understand why. And they said, well, you haven't been using it. And we sent, we don't have to send notices because that's what I asked. I said, well, you all don't send notices when you're going to close my credit card. And the representative said, no, we don't have to send any notices. We just really looked and we saw that you haven't used the card in a year. So we closed it. I said, okay, well, can you reopen it? And she said, yeah, but we're going to have to run your credit. And I said, okay, is it a hard pull or a soft pull? And she said, no, it's going to be a hard pull. So I sat and I'm like, okay, do I want this hard pull? I know I got good credit, so I know I'm going to get it back. But I knew that I was going to have to lose points in order to do it. So I thought to myself, again, hard pull, lose 15 plus years on this card of credit history, or just don't do anything. I let her pull my credit. And then probably within a month, my credit went back to however many points I had lost from that hard pull. But that is something, in all honesty, out of all the years that I've had credit, that I had no idea that they just will close your card, not tell you. And then knowing, looking at my history that, okay, this person has had this card for this many years, as a courtesy, let's let her know that we're going to close it, versus somebody that had it for 2 years, had rocky payments, didn't use it for a year. Okay, fine. But anytime I've ever used the card, I've always paid it off, never was late, any of those things. And they still closed my credit card. I know they closed it because it does not look good on their portfolio, because their portfolios is going to look at the performance and it's going to look at delinquency rate. And I'm not helping their delinquency rate go down because I'm not using it and paying it off. So if they're looking for funders and investors, I'm having absolutely no impact on them. And in one of my previous roles, I worked as a portfolio manager, which is how I was able to finally understand, like, why do credit companies care if we don't use the credit that they're giving us, as long as we pay them back when we use it? But again, it's all related to business.
Correct. I guess my question is that once you let them pull your credit and they reopen it, did they restore your history from the time period, or did it start all over?
No, you get it's like the card was never closed. So you get your history back, you get your same interest rate, your same
right.
whatever it's called, maximum amount, I don't even know. So all that stayed the same. But obviously, gratefully, I wasn't in a space where I was attempting to buy a house. Had I been in that predicament, now it would have been a tougher decision. And maybe
how many
write a letter.
How many points did your score drop from them closing it?
Honestly, I don't even know. I really don't. Probably like 15 or 20 points, because I'm right now, and especially then, there was nothing I needed credit for. I had a house, I had my car. Mm-hmm. There was nothing that I needed to purchase that was going to be a big purchase. So I wasn't necessarily tripping off of the fact that it was going to drop. I was just annoyed that I had been with them for so long and that they didn't even give me the common courtesy to say, hey, just make one purchase. So now with my credit cards, I make sure if I see a card and I'm like, oh, I haven't used it in a while, let me go buy a pack of gum, something to make sure that they don't close my accounts, because I don't have any new credit. All of my credit is, umpteen years old. So I definitely don't.
Yeah, I had a similar situation where I did receive the letter and went to go use the credit card, but they had already shut it off. I'm like, I just got the letter, so they sent me the letter and they're like, oh, we're sorry, we didn't know. And at that point I was just like, you know what, you already hit my points, I don't care, I'm not doing business with you anymore. But I mean, I did have a line of credit that was older than that one, so it's just one of those things that you just got to see what you're doing today. Another thing too is that kind of just to keep it going on, with your credit score. I know a lot of people do know about, paying 3 times the minimum amount, but it's more to it than just paying 3 times the minimum amount. You can pay 3 times the minimum amount, but what you really should do is break that over 3 payments in 1 month versus just paying, say, your minimum payment is $100 and you normally pay $300. Well, you want to do 3 $100 payments to boost your score.
Yeah. So now for me, it's not intentional that I do this, but so I have one credit card and my Southwest actually. And what I do with that is, and I've actually been doing this for the past 8 years. I have one credit card that I pay. When I say everything, I don't even use debit cards at all. One, because I feel like I have a higher level of protection through my credit card, because whenever there's an issue, the credit card company is going to go to bat for you. The bank, they don't really care, because it ain't our money, it's your money. They got your money. We'll try to do something, but we ain't worried about it because it came out of your bank account, right? Unless it's like a huge overdraw that now they're trying to recoup their funds. But if it's, I bought an item and it's not real, or I bought an item, whatever the case may be, and you're trying to do a dispute, I have more protection with my credit card company than I do with the debit card company. I digress. Now, I pay everything. But when I say everything, I only spend what financially I would otherwise spend with my own cash. So if I had a debit card, so I'm paying my utility bills, I'm paying if I go to the store, if I want to get something to eat, my groceries, gas, everything that I would normally pay with a debit card, I pay on my credit card. And what I do is, this is me now. When I get my statement, let's say they say I owe $1,000. What I do is through my bank, I set up automatic payments for those two payments once I get paid. So if I get paid every other Friday, the first Friday, automatic $500 is going to go over to my credit card. My next, paycheck, $500 automatically goes. So I'm always at a zero balance. I never carry any balance over ever. And I'm able to make sure that I'm not late because I set it up on auto. But I also make sure because, like we're in the month of February. So I have to be more conscientious of, okay, my payment date is going to come up a little bit quicker. So I actually had to do my auto pay 2 days before I got paid because of how the cycle landed. But I feel with that, I'm continuously building credit. If there's an issue, like I can immediately lock my card. If I drop my card somewhere, I can go and lock it immediately. I can reach out to them whenever. And then because they see that I'm using a card a lot of things they will like give me a break on. I accidentally paid the wrong credit card, but luckily it's with the same company. I called them. I said, I don't know how my bank did it. They was like, oh, no problem. We'll take the money from that card. We'll switch it over to the other card. We'll refund the interest. So you start to build those relationships as well, because they're going to look at my history and see, wait, she's been using this card for 7 years. She's never been late. She always pays it off. Clearly, there had to be something that happened.
That was going on.
Yeah. So that's something to think about doing, but you have to be very, very structured in that process. Because one wrong move and you got a card that got 20% interest and you got $1,000 sitting on there. And then you end up in the cycle of not being able to pay that off.
Yeah. And, and that's key too. I pretty much do the same thing that you do, have that one card, that I pay everything on and have it set up to auto pay, 2 to 3 times a month. And make sure that, more than anything, because of course, it's stuff like electric bills or whatever, and you don't want to carry that into the next month anyway, and it's also bills that you're going to pay anyway. So that you're going to pay your water bill, you're going to pay your electric bill. And so it makes sense to put it on that card. And that way you can pay everything at the beginning of the month. And then you let your pay periods take care of it. So, once again, that's just the best way to utilize your card, especially if you're in the process of building your credit. And like Ebony said, maintaining, she's been doing it for 8 years. Maintaining and also certain credit cards, you get different perks. That's a good thing too, whether it's miles or cash back. I know 2 years in a row we've bought Christmas presents off our cash back from Discover. So yeah,
Wow.
it's a big difference. And then usually going into January and February, because we're using it, then we're using the cash back to pay those monthly payments.
Yeah.
So I mean, it's just different things that you can do to utilize, and get more for your money. You definitely, if you can get a cashback card or points, towards airfare or anything to that nature, that's the cards that you want to kind of look at. The next thing, since we're talking about cards, another way to boost your credit score is to request credit limit increases. Some companies go in and look to increase you, once a year, but you don't have to wait that for that once a year. You can ask for an increase before then. But of course, you want to be in that sweet spot when you do ask for it. You do
Mhm.
want to be, that, under 30%, 10% spot. So, and some, it depends if you're dealing with a large credit card company like the Chase and everything, versus a credit union. Credit unions kind of base their ability to give you credit off of your score with them.
Mhm.
So, once again, you may not be paying nobody else, but you're paying your credit union, and
Yeah.
they're like, hey, they paying me,
That's all that
one of
matters.
the, yeah, so I see stuff all the time. I'm like, okay, we extended credit on this. Okay,
Yeah.
all the time. But the truth is that the member has been faithful to the credit union.
Mhm.
So that's another good route. Do your researches. Do your research on national credit unions. Do research on credit unions in your area, and find out which one is the best fit. Like I say, always shop. Don't just jump up and say, "Oh, I'm going to get credit here. I'm good." Shop, because you're talking about your livelihood. You're talking about interest rates. Which ones. Another thing too is that we're talking about the beginner credit cards. Some of those beginner credit cards lead to offers to larger credit cards.
Mhm.
Not telling you which credit card to pick, but there are some out there that I know of. Like you don't know that underneath who the big bank is.
Right.
There's a couple of them out there. You start doing good by them, then all of a sudden they send you to the next level, and then you get like someone offer you this credit limit of 2,500, and you're like, oh, wait a minute. It's actually you're stepping up in that bank, and then finally you get that offer from the big bank. And
Mhm.
you're like, oh, and then you come back and you find out, okay, well, this card was with that bank, that card was with that bank, and you don't know. But just do your research. Like I said, there's a lot of forums out there. You could say, hey, if I get a credit card with ABCY, what's the I guess what you call it, the medium credit amount approval.
Mm.
People are
Readers, yeah.
talking about that, like, hey, I got this amount, I got this, so you can kind of know what you're getting yourself into. That
And then,
look for the credit score, the amount of credit that they're giving for that credit score. All that is out there.
so I want to go back to making sure that we're thinking about the importance of building those relationships. So when you're thinking about credit unions, of course, I got a story. So probably, I don't know, 10 plus years ago, I needed a signature loan, but I needed $10,000. And I think they offered me $8,000. And I had been with the credit union for a while. So I had a conversation with the underwriter. I said, look, I need the $10,000. There's no way that I can sign off on the eight. Eight is not going to do anything for me. I'm definitely, I'm going to pay it off my credit, things that I've done here. They said, okay, let me go back and have a conversation. They went back, had a conversation, came back and was like, okay, we'll be able to give you the $10,000. Now at a bank, they're not
That
going
would
to go talk
never
to nobody. They're going
happen.
to say, this is what it is. Unfortunately, based off of risk management, we're able to offer you the $8,000. We understand that might not help you. And if that's not the case, we understand. And then, of course, you're going to walk away with nothing, because it would have been pointless for me to take 8,000 when I really needed the 10. So it's not necessarily solving my
Mhm.
problem. But I also want you all to think about, and I don't know if every state has them, but I do believe that most do, a CDFI, which is a community development financial institution. So what these organizations do is they essentially is what we consider like the unbanked, or individuals who otherwise would not be able to go to a traditional bank and get a loan or get credit or get any of those things. So how the process works, they have a lot of different programs. I used to work for one, and they definitely had credit building specialists there. And these services were provided free of charge. What I can say is when they give out loans, it was based more on the person. It was more holistic. We would have what we consider, I don't know, like family or lineage that we would look at as well. It's like, okay, well, mom got a loan from us and now she's on her feet. Now son is coming along. We're going to give son a loan, not because his credit is right, his bank statements are right. None of that. It's literally based off of personal relationships and because they want to make sure that individuals in communities, and it's normally like distressed communities, underserved communities, because they receive federal funds. So they receive free money grants, which there's a grant video that I posted last week if you want to go watch it. They get these funds and they're supposed to utilize them in that way, and they're supposed to disperse the funds. But then what they do is they're graduating you to a bank because they work with banks. Some of our clients, when I was working at the CDFI, they had over 700 credit score. Of course, they didn't have it starting off, and they still would not go to a bank. But because of how the CDFI is set up, we would have to get some type of documentation that they would have to sign and say, look, I know I have good credit. I know I can get a better interest rate at the bank. However, I like working with you all. So I highly recommend that because they have like lunch and learns, they have special events, they have earmarked funds. Even if you're a startup business, they will work with you. And I mean, we had one person, I know the credit score was less than 500. I'm not going to say how much of a loan this person got, but I was surprised because I was probably in like my first month and I didn't understand like how this person doesn't have good credit. They've, missed some payments. They got some overdrafts on their bank account, and we're going to trust that they're going to pay us back. But the way the system is set up, they have a reserve fund, which most banks will have, right? So that's similar in nature, but the underwriting is completely different. So definitely look and see if your community has any CDFIs. And if your community doesn't, maybe there's one nearby that has funds for other states, because we had funds for other states as well, but it was a limited amount of states. Mainly, obviously, it was for Missouri residents in specific communities as well. So sometimes there's that line in the sand of, okay, if you live in $1 million house, you're probably not going to be our target market. However, if you're in more of, middle income, distressed community, definitely. And that's a way to build not only your personal credit, but your business credit, because they will give loans in your business name as well, where they're not relying as heavily on your personal credit. What is the best company that you can apply for a business credit card without them running your personal credit? That I'm going to be very transparent. I do not know the answer to, because the only thing that I'm aware of is that if you're a new business starting out, in any business that I've started and I wanted to get a credit card, they've run my personal credit. There was no way around it. And I only bank with a few different banks, so I don't know all of the banks and what the requirements are. I personally can't see a bank, right? I can't see a bank saying we don't need to look at your personal credit to get this loan. A CDFI will do a soft pull, so that's not going to hit you too hard. They'll do a soft pull if you're trying to get, a loan in your business name. So that's a route if there's a CDFI in your community. And if you meet, it's other qualifications as well for you to be able to become a client at these institutions. You are welcome. Are there other questions, other tidbits that we can discuss? I can't think of anything else that's kind of like what to do today, but I would say one of the things that we mentioned as far as Netflix or Hulu or whatever you have, putting that on auto pay but make sure it's a card that you're not utilizing for something else, because then, it can get kind of murky if you are not able to pay it off. That's the one thing I think is the easiest to do if you have more than one credit card and one is sitting at a zero balance. Do you have other items, Ms. Coline? Because that's the one that just pops in my head. That's easiest to do.
No,
okay?
Just basically, as we stated, pay attention to your credit utilization and babysit your credit report Um,
Use it.
download, Credit Sesame, download Credit Karma, Bill Guard. I mean, there's so many of them out there. I mean, even you're entitled to a free credit report once a year. If
Mhm,
you do that, make sure you checking that stuff. Make sure that things are being updated accurately. Make sure
mhm,
that things that should fall off is fell off. Different things like that is very important. You'll be amazed the first time you look at your credit report and you're like, oh, what is this? Just,
mhm,
simple stuff. Collections, everybody put a lot of emphasis on collections. Just medical collections, if they're being paid, they're supposed to come off your credit report
mhm,
automatically. Do keep that in mind. Additionally, too, if the debt is owned by a collection agency, you can request that if you do pay it off, that they totally remove it. Because I mean, that way it won't be there, won't show that you ever had that collection, different things like that. Which you can go back to the other videos, that we talked about, your credit and everything. But more than anything, if you don't do anything else, watch it. Because when you watch it, you start to learn things and you start to see things that you can do to dispute, different things like that.
And then also the website is annualcreditreport.com, right? Or is it .gov? I think it's .com.
It's .com.
Okay, annualcreditreport.com. I don't know if they're still doing this, but I know at the height of COVID, they were letting you get your credit report every week. When you go to the website, I'm pretty sure it should say, you can get it once a week or once a year, and you can get it from all three bureaus as well. So it'll let you know everything that's on your credit. So you can be able to go through it and make sure that, there's not any surprises on there, and making sure that you handle that immediately if there is something on there that you are unaware of. But then when most credit cards, because not even credit cards at this point, my bank, whenever I log in, my credit score is sitting right over to the right on the dashboard. But with the credit card
Mhm.
companies, they have it as well. And then it'll tell me, oh, you went up 10 or down 5, or we don't see, a difference. So it makes it much easier for individuals to really track their credit, because if I logged into my account and they said your credit dropped 20 points, immediately I'm going to try to figure out what happened, because that would be abnormal. But if it dropped by 5 points, that's more normal, because if I spent more in 1 month than I did in the previous month, then it's going to fluctuate. So that's something, like I said, if credit card, bank, and then some of the apps that Ms. Colline has mentioned as well, you can utilize those. But just when you're using the apps, know that it's not going as in depth as, say, if they did a hard pull, but it can give you an idea of where your credit is, just so you can know, okay, this is what I need to work on. This is some stuff that's not as important, right? So with that, if you got anything of
Um,
value, like the video, leave us a comment, subscribe, share the content. Yeah, all these things that you have to say for YouTube. I just learned that you have to say share. So now we got like, we got subscribe, we got comment, we got share. Just do all the stuff that y'all probably already know about anyways, but I'm just saying it because that's what they said you should say when you're growing a channel. I would appreciate it because it helps the algorithm, and it will help me make it to YouTube partner. I'm not there yet, but fingers crossed that it will come sooner rather than later. And Ms. Colline, I know you said a final comment.
yes, we were talking about the height of COVID, and just kind of want to let everyone know, during COVID, the CARES Act did go into protecting you with your credit bureau. So if you do go in and you see that you've had some late payments reported during that time period, you can request that your creditors update it, as long as it wasn't. Okay, let me take it back. If you have accounts that you're in good status with, when COVID started in March of 20, was it 2020? I can't even remember
Yeah,
no
it's been
more.
a
It's been so
while.
long. March of 2020, your accounts were in good status. And because of COVID, maybe you couldn't pay something or whatever. If it was in good status in the beginning, it should have reported good status no matter how delinquent you got
Mhm.
during that time period. So if you do see that, you can dispute it under the CARES Act. So keep that in mind, because if you can get that updated, that will also boost your credit scores.
Perfect, 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 perfect. So with that, I'm just going to wait a couple seconds and make sure there's not any final questions before we log out. Yes, Nicole, it was 2020 for COVID. Thank you for letting us know that. And I did hear about the COVID credit thing that you just mentioned.
Yes, the
That
CARES Act.
CARES Act, because I know a couple people who actually did it because their credit score dropped. They did whatever you're supposed to do and it went back up. So that's definitely an option if you weren't aware of it, that you can actually do that now. All right, well, with that, we are going to sign out. Please make sure you check out my previous video. It's a $60,000 grant. Deadline is February 28th. I'm going to be posting a few more grants this week. I'm going to try to do some that's uploaded, some that's live. So definitely check that out. And with that, Ms. Colon, I want to thank you for doing these sessions with me. I think this is our fourth one. Next week, we'll be talking about marketing. So if you need to learn, I keep saying TikTok, I just downloaded it, so I got to figure that out. But, you know, social media marketing, all of that stuff, we're going to have a few sessions on that coming up. So definitely Monday, 6 Central Time will be when we will have our first conversation with that. So I want you all to enjoy the rest of you all's evening, and then thank you for taking the time to sit here with me and Ms. Colon and listen to our YouTube video on building your credit.
Thank you. Have a good night.
You're right. Good night.